Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick on the show today. First of all, hope everyone had a great weekend, but we got to talk about a busy morning in analyst ratings land. A lot of ratings to discuss. Acquisition being made by Marvell Technologies. We'll recap the trading actions from last weekend, from Friday, and the biggest trades to look forward to on this Thanksgiving week. Our guest today will be at E35, Phil Davis, will join us. He is the founder of philstockworld.com. Joel, what's doing this morning in the S&Ps?
S&P futures are down $1.50. We were down quite a bit more after night earlier this evening or late this morning. Perhaps Europe being down weighed on us a little bit. Pre-market low 67.75, pre-market high 78.75. We'll be keeping an eye on the close of 76.25. We have crude trading down 42 cents at 56.29. Gold in the red by 360 at 1292.90, and silver down 18 cents at 17.90. And we have Bitcoin over 8,146.99.
Joel making the money.
It's purely a speculative play. And
making the money.
Dennis, when are you getting long? That's what I'm getting at. When you get long.
When I get long, you got to get out of this Bitcoin. So,
but that's what
when I get out, and you have to get out. I'm not getting a Bitcoin. Not anytime soon. I don't know. Maybe the whole world changes and currency is worthless and we're all going to Bitcoin. But no, I told you, I can't value it. It's not for me. But I'm glad you're making money, Joe. I'm glad one of us is starting to make money on this thing.
Yeah,
so.
I mean, it's fun. We had a good discussion on it on Friday. We're just educating ourselves on it, the dynamics of it. The Merck coming out with the futures in December. That should be very interesting. A lot of things going on in Bitcoin, but we got to start out with what's going on over here, and we have a takeover.
We do. This was rumored last week, and you can see the big pop. Actually, I guess time's flying here. It was 2 weeks ago, actually, now that Marvell was rumored to be going to take over Cavium. Spencer, what are the details?
The details is that they're buying Cavium for $40 per share in cash, and 2.1757 shares of Marvell stock for
Slow
each.
Down.
I'll buy it. I'll buy 40.
Sorry, okay,
I'll buy 40.
I'll do it again. For
the 40's fine.
Okay.
What's the ratio?
2.1757 shares.
2.1757. So all you risk arbs out there, that's your ratio, 2.1757. That's what you need to know for MRVL. So you add up the $40 plus the 2.17 times the Marvell is the share price that you will get if this takeover goes through. And there's very often not very much blocks in these smaller tech deals. So I'd imagine it is going to go through.
Dennis, you gave that very succinctly, but could you just break that down a little bit slower there on the ratio and for the arb traders?
I've got a lot of history trading risk arbitrage. And risk arbitrage is just when one company's taken over another company and you're trading them. And I still do that today. I traded the Time Warner AT&T deal for a long time there against each other. You can't do that as much now because there's so much uncertainty in the deal. And then obviously risk arbitrage starts to fall apart. But, I learned this back at Bright Trading. This was one of the core strategies, just doing risk arb back in the day. And I can remember, for years there, probably in the early 2000s, I just focused on that. Like we had, remember the Honeywell and GE deals, and I remember the JP Morgan Chase deal was one of my most favorite deals. That was because JP Morgan had taken over Chase Manhattan, and the ratio was 3.7 to 1. So it's a nice ratio. So basically for every, you could just round it up to 4 if you wanted to. But, I would trade it. You trade it against, so many shares. So it's 3.7 to 1. So if you had 100 for every 100 shares you have of JP Morgan, 370 shares is the Chase Manhattan position you want to have. But basically what happens is that JP Morgan, which was $190 stock back then, moves, $2. Well, Chase Manhattan has to move 50 cents to play catch up. So that's, the ratio that you're using, and MRVL, CAVM. So that's the one thing that I'm interested immediately when I hear takeover for cash and stock. I want to know what the stock or the ratio is of the shares, because that's what's going to move the price. So right now you can say, okay, so if it's 2.1757 Marvell for every CAVM, that means, it's going to be for every move, for every, dollar move that we have in Marvell, CAVM should move to $2.17.
All right.
Make sense?
Yeah, it does. I just look at it, Dennis. You're giving the trading perspective. I'm just going to look at the daily charts here for Marvell just to see what the street actually thinks about the deal. When it was first rumored, they really liked it. They ran the stock up to 21.08, and then it came in. But the level I'm keeping out, it's trading down 47 cents in the pre-market at 1982. But the lowest it's traded is 1975 since these rumors have been around. So that's the number to me where the street's deciding whether or not they like the deal here. You see the gap down to just over 1850. So keeping an eye on 1975 in Marvell, and that would take you down to the gap fill at 1855.
And if you want to do the quick calc, grab actually your calculator and get a price on this right now. So we'll just go, Marvell's current price is 1984. So because the media is going to tell you this stuff, but Marvell's already moved here. So we have new information. Marvell's down 2%. So go 1984 times 2.1757 gives you $43.16. Add up your other 40. That means at this price right now, if the merger was to close today at this price, well, it just fell here. So obviously you got a moving target there. It would be CAVM would be worth $43.16. It's trading at $80. It's telling you there's a $3 discount that the risk arbs are putting on there. That's saying, maybe this deal, that's the rest of the deal doesn't go through for whatever reason. So there's a $3 discount on $80 stock. It's not much. Time Warner was trading, and Time Warner is trading, at almost a 20-point discount right now. You're talking about like 25% discount to where the AT&T takeover is. So there's a lot of meat on that bone of Time Warner if that deal goes through. If the deal goes through for Marvell and CAVM, there's only 3 points on the bone, which is not nearly as much, which is showing you the risk arbs have a lot of confidence in this deal going through, not a lot of confidence right now in the Time Warner AT&T deal going through.
Any sympathy plays along these lines, or
hard in technology? And this was already known, so it's not like it's out of the blue. So everything would already kind of be priced for it. I mean, even if you look, it's not a huge pop in CAVM. You can say, oh, that's not much of a premium. We're only trading up 6%. Well, CAVM already had its pop 2 weeks ago when this was, announced. I don't know who it was, if it was Reuters or who announced it originally back on that Friday night, but you can see the stock went from $68 to $75. I mean, over half of your premium was already baked into this because this deal was already known that it was cooking. It was just a matter of what the price was going to be. So they give it another $4. So people who are jumping in here, buying it on rumor are rewarded this morning to a certain extent, but it was pretty much out there, this deal.
All right. Let's little news on Alibaba here.
Jimmy A just giving us a site before we move on, just to the chat there. He's saying insidearbitrage.com. Gives you all the deals that are currently outstanding. I didn't know about that site, Jimmy A. I kind of just always do it on my own. I just have a little sheet of paper. I'm old school here that I just write the stuff down on, and then I've got the deals in front of me. But I will use that, because if you miss a deal or something and you can't find the ratio, I'm always going hunting the website and doing it all myself. Maybe the site does it for me, so I'll check it out. Thanks, Jimmy A. It's insidearbitrage.com. Free promo for insidearbitrage.com there.
All right.
Benzinga Pro helps with that too, I believe.
Yeah, we help with that. We help with that. We help with that too. But let's get to some other news. Joel, you want to hit on Baba? So Baba's going brick and mortar. They're investing $2.88 billion for about a 36% stake in the Sun Art Retail Group, which is one of the largest, if not the largest retail group, I believe, in China.
Really? So they're going to have like a Alibaba store in China?
They're doing they're running the Amazon playbook, apparently.
Wow, they are apparently so. And then the shareholders are applauding it. What are your thoughts on this, Joel? Having a physical Alibaba store?
I mean, they're doing something with their money, right? They have the money, their stock price is up, so they're putting the money to work. I mean, I still am undecided on it. I mean, brick and mortar is not going away for good. If you're selling the goods and you got a place to do it, then I guess that makes it better, especially if they're getting it at a discount here. Dennis, you talked about 190 here in Alibaba. That was the high. 189.86 was the high on November 7th. We haven't got there yet in the pre-market. Pre-market high is at, where's our pre-market high? Just over $88. We just ticked it. No, 88.07 your pre-market high, and then you have a daily high right near 190.
And I can confirm.
I mean, that's the level.
I can confirm that. I was going to say SunArt, they are the largest grocer, or as they say, hypermarket store or operator in China. So it is like Whole Foods, but just much larger.
That's a level 190. I just tell you, there's two stocks that I look at every single night, and I think about buying every night and then selling the open the next day. We have been talking about this strategy for months. Square and Alibaba, they seem to open higher almost every single day. I mean, there's the odd day, where the S&P futures are killed or something that they don't open higher, but add up the days, how many days that Square or Baba open higher, and it's a lot of days. And here you are, S&P's down, doesn't matter. Baba's up. Square goes up every day, no matter what. I mean, we can move to that one here in a second, but that Square has been an incredible stock. These two stocks, Alibaba just starts to get interesting again because it's actually consolidated for the last couple of weeks. It gets real interesting above 190. And I think if we can take out the 190, 122, I think $200 will be in the cards very quickly. So there's some nice, 191 to 200. I like that air pocket up there. Obviously, it's all air above 190, 122, but there's always a little resistance at the big hole numbers there. So I think we can get up above 190, 122. Maybe this will be the catalyst. I'm not sure. We'll see what it does. The overall market, and the overall tech market here isn't as great. It had a little bit of a rough Friday there. There was actually a few breakdowns and reversals in a few key stocks. I mean, Amazon had a little bit of a rough day. Netflix is starting to, be pretty rough, although Netflix has kind of had it rough since Kevin Spacey stuff all happened, which maybe was a little bit predictable, but the stock really hasn't been able to catch a bit since. Apple obviously had a rough day on Friday as well. So it's mixed a little bit there, but Alibaba I like, and Square has just been a monster. I mean, Square doesn't care what the market does. That thing just goes up. Like, look at that SQ chart.
All right, let's pull it up here. They hit it. It was weird. They hit it a little bit after earnings, but then it just came roaring back.
Roaring
back.
Like a big roar.
Well, you remember what the catalyst was too, right?
Yeah, Bitcoin.
Yeah, Bitcoin. They're doing something.
I mentioned Bitcoin. I mean, I'm telling you, that's what Macy's needs to do. Macy's needs to go and say, we're going to start accepting Bitcoin. And that's not going to be $25. You're going to accept Bitcoin in your store. People are coming with their Bitcoin bag, a bag of Bitcoins.
Square, you have a high on Friday, which was the all-time high at 45.74. You tailed off to close at 44.18. So trading up in the pre-market, really the only number you can give you is that 45.74. But man, oh man, that was nearly $3 over your all-time high from the previous day. So that's a big leap on big volume. No, $4 is correct. So man, oh man.
I had a big Square position there overnight, Thursday night to Friday night, the Evercore upgrade. And I saw the Evercore upgrade, and obviously that was moving it up too. And, but in the pre-market there, I talked about it. I traded out of it, and I was pretty happy. I mean, I had bought the stock, and obviously, the stock was up almost a point the next day in the pre-market, trading up in the 40, and we're looking, for Friday's action. This was at 42.75. Remember, I even ticked the high in the pre-market. Yeah. I was like, I was pretty happy. Sold 42.75, 42.65. I tried to rebuy the open, but it opened up 60-70 cents on a day that we were kind of, opening kind of weak. So I didn't get the open. And I looked back at it an hour later, it was up $2. I was like, whoa, it's a big move. I looked back an hour later, it was up $3.50. I was like, holy cow, did I screw up by selling that in the pre-market? Guess I should have held all day. But man, that Square has just been an absolute monster.
What do you think about a stock making a new all-time high by $4? A $40 stock making an all-time high, 41.97. I mean, is that just incredible strength, or are you thinking
it's incredible? It's an upside capitulation mode, is what it is now. Where everybody's been the slow, steady climb. And we have been talking about, you got to give us some props on this. We never pat ourselves on the back very often. I usually kick myself in the butt for the stuff I miss. But come on, we have been talking about Square on this show for the last 2 months. And we've been talking about how the big guy and the buy balance has been there, and when that makes it trendy. I think it's my best stock of the year. I've bought it so many times over the course of, just been basically day trading it from the long side, or overnight trading it from the long side in the last 2 months. I haven't looked, but I bet you it's one of my best stocks of the year. I make money in Square every day, it seems like, just because you've got it. If you've got it overnight long, it goes up the next day. I did not take it overnight Friday long because I was scared of the huge move that it had. I shouldn't have been, because here it is this morning again. Market's trading down. Is there even any news on Square? Is trade up 1.5% for fun?
I didn't see any
news
this morning.
I don't think there's anything on Square.
I'll check one more time. But
just up 1.5% for fun.
No,
it's just another day. It's a Monday. Square's going to be up 1.5%. It is loved, as all the stocks that we've talked about that have been hated by the street, where the retailers were for a long time, and General Electric obviously hated. This Square is loved. It's eventually going to turn, but I guess you just keep riding until it doesn't work anymore, and then the path of least resistance continues to be higher.
Do you think that the Square rally is just giving some people some faith in Twitter here?
I think so. You know what? I thought that already here too, and Twitter is starting to pull up here too. You got Dorsey. I think bang on, Joel. I think I completely agree with you here. And Twitter's starting to look really good on the charts here too. Would not be surprised if Twitter it's up here again this morning. I like Twitter. I think you could start to see some money flying in Twitter, and Twitter could go maybe even back to that 22 level there that it hit a couple days after earnings.
Yeah, 21.96. That's been the high. The day after earnings day, the follow through. Then you had the pullback. Your pre-market high is not a lot of stock trading, 2094, but the level to keep an eye on here in Twitter, 2099, another whole number, November 1st high after it came back. But I don't know, money seems to be flowing into Twitter here year end. And I don't know, the fundamental, the earning report was okay. That's really what they loved it off, but it just seems to be a Jack Dorsey sympathy play here in Twitter.
They're loving Jack.
Jack.
You got to play there, Joel. It's a good call. The stock's looking good here. I like Twitter. I'm writing it down on my sheet. I like Twitter here now too.
Do you like
it's up in the pre-market on a day where it's slightly down here. Yeah, I'm a fan.
You're gonna ask if you like it enough for a lunch bet.
No, I was gonna ask.
I'm on his side.
No. He's on my side. Okay. I was gonna say, maybe breaking out the old portfolio on this one.
No, valuation still scares the hell out of me on Twitter. But trading wise, on the swing trading portfolio, I like it. I think it could see $22. I'm a fan.
Okay, all right. We understand.
Yeah, I was asking if anybody still trades VRX. It has a nice pop up. I always take a look at it, and I often do day trade it still because it's got some good volatility. It's interesting setup here too, because everybody threw it out. Everybody loved it at 18 when I was dogging it. And then everybody hated it when it's down at 13, 12, and 11. Finally had capitulation to the sell side. And that, I believe, was that on earnings or something? I can't remember. 1179, back on the 2nd November, Spencer. We're looking at open at 1179 and just fell out of bed. Got down under $11, 1094, but then reversed. And the next day, and obviously 2 days later, reclaimed over $12. And then we had the gap up. It was the earnings was a gap up, right?
No, on the second, no, they had.
I'm talking more than that. So I said originally, what happened on the second?
They had FDA approval for a drug.
Okay, so then that turned, and then we had earnings on the 6th or 7th, 6th.
Let me look.
The gap up.
I thought that wasn't that.
Yeah, the 7th pre-market.
And that's when they paid down some debt, right?
Mm-hmm.
Or they announced that they were paying down some debt.
Correct.
Yeah, that's when it had. That's when it had the big move. I don't know. So many of these rallies have failed in this thing, but what I like about this one, the current setup right now, as we're looking at it, you had that 1362 low after the gap up, and where did you get to? You got to 1574. Can we call that like a 4-point move? Yeah. No, not quite. 2 points.
Close.
No, 13.
Oh, you're talking the gap. Okay,
yeah, the gap. And that was $1, right? A $2 move. You have half of that. And it's just kind of hanging in there. That was the last close at 1469. That was your close on Friday. So holds in there, a chance to go back up. If not, man, I don't know if you're going to get this one back in the gap. You need to get all the way down to 1218 to fill the gap.
I think it's got some love here now, actually. I think as long as it stays above that level where it gapped up from, which is that 1362 level, and it did come down, try to touch it 3 days, go down to 1386, but, it started to turn up again. I think VRX has some love. I'm still, skeptical of so much debt. There's a lot of issues there. You do have headline risk always with VRX, but I mean, if you're day trading, I think this is another one that actually is looking and showing some life. But, dogs have been barking. And this is a perennial dog here. I mean, we've been talking about the dogs on Friday. Those retail stocks, absolute monsters on Friday. I mean, it's stocks like Abercrombie and Fitch rallying 20%, stocks like Foot Locker rallying over 20%. Even Target, which they hated the earnings report 3 days ago, I guess they decided they got it wrong the street because it came right back, roaring back. I mean, the dogs have been barking, not only, and GE, which is a perennial dog, but it did make new lows the last 2 days. So that's like up days for GE when it's not going down. It's been, Viacom coming back. Viacom had a huge day on Friday, obviously off the rumors off Fox. But it's interesting, you see Fox having a big move. Well, Viacom had a bigger move, and they weren't even the media company rumored. So they're coming here, they're combing the ditches, and they're finding some buyers there in some of these dogs.
Yeah, coming in, well, a little early, right, for end of the year window dressing, right? But still looking maybe some sell pressure on GE going into the end of the year. Favorable article by Stephen Sears and Barron's, like, maybe enough is enough here. I don't know, though, man. I just think a lot of people are going to be looking at it. There's some. In his article, he pointed out that someone still has the most ridiculous cost basis. Some Texas investor has a cost basis of like 11 cents. So, you have a large position, you trade it out here, you do it with your taxes. And then even if you have to buy it back a little bit higher after the end of the year with the tax break, you're getting.
You got to wait the 30 days.
30 days, right. Right.
Yeah.
I don't know. There's something to be said.
Oh, I think it's going to hold it down. They've got all kinds of problems. I think the tax loss. Maybe I'm going to do it. Maybe I'm going to take some losses on this and buck it and move on from GE. Well, it's the one stock that sticks out like a sore thumb, because we're at a bull market there. And like I said, I got about 100 stocks. I think I'm up at 90 of them, but the one GE just sticks out like a sore thumb.
Yeah, so. If you want to buy it, and Dennis, because that's probably the only losing stock in your portfolio.
There's not a lot, but that's not because I'm good. It's because we're in a bull market. I'll tell you, when we get into a bear market, if we ever do, there'll be a lot of losers, and there are stocks starting to show up as losers. But yeah, GE, like I said, I've had 17 years. I'd probably stick with it, but we'll see. Maybe I'll write it off at the end of the year. Depends how I feel. I'll just have an anger day with it, sell at the low, and then it'll rally.
1746. Right. Just keep an eye on that one, Dennis.
Jump over here to the ratings, because there was some ratings parade here happening over the weekend. Mondays are always busy in ratings land. But you know what? I'm going to jump over to this one first here, Spencer. The Fizz. We got an upgrade there.
National Beverage Company getting upgraded. Susquehanna to positive from a neutral. So
that's the equivalent of their buy rating.
Yes.
So, and it's trading up 7.5% here in the pre-market. It's a stock we haven't talked about for a while. I thought I saw a $150 price target. Is that right?
Yes. 135 was the prior price target.
So they're going up to 150 here now on the Fizz. Joel, this was your stock here, and obviously it's had an incredible year. It started the year down at around $50. It's over doubled here in 2017. We're now trading at 110 in the pre-market there. I'm not sure where it's going to open. It's only traded 237 shares. Spread is super wide, 105.50 to 116. So you're very wide on the spread. But this one's thinly traded. It's getting an upgrade. It already had some love going. I think 110's in the cards here today.
It is in the cards. It printed there 180 shares in the last bracket. So this is up on really light volume. I know it's not heavily traded. 55 shares went off at 105 and then 180 in the last bracket here. For a relevant level here in this, you did have a high at 111.48. That's your October 12th high, but I don't know. I don't even know if this thing can open over 107.50, and I'm not going to make a lunch bet.
108's offered now.
Wait,
I said
Joel, I want to know what has Fizz done since October 19th. I only ask because that was the day that the CEO released that crazy press release where he blamed short sellers, high frequency bot stampeding results, and all that for why the stock had been down over the last month or so prior to that.
It had a little bit of rally until today. On the 19th, it closed at 97.70, and on Friday, it went off the board at 102.23. So I don't know if it had a a big effect on it. It did have a nice, pullback, kind of where from it broke out at the 92, 93 area, and then a quiet couple days and kind of a rounding bottom. Nice breakout over 100 would have been nice to trade it, but I don't know. We'll call 107. Dennis, did that 108s get lifted yet or not?
No, they're sitting there. So it got a little excited to be up $7 on that, but I don't know. I don't know if it's not going to open that high. 108 offer, but I think it could still be in the cards up there at 110. But yeah, you got resistance there. You could probably point out this couple highs there in the 107s.
Okay. Yeah, it's old double top at the 107.50 area. On the 13th, there's 107.55. And on the 16th, 107.60.
General Motors catching an upgrade at Guggenheim here. It's trading up in the pre-market. GM quietly starting to come back. So had the big run up. You've had the pullback here. Now you're starting to get some life here again, GM. So it looks interesting to me here on the charts. GM started to break out.
This one, it filled the one gap. You had the double gap. Actually, it was a triple gap situation. You only filled one of them. And I really thought we were going to at least maybe get back down into the lower 40s here and get close to that breakout level. It never did. So now you're on the upswing. People eyeing, better chart looker than me, they eyeing it ahead of that. 44.36 is your pre-market high. Let's go to the dailies here. Nothing. That must have been a downgrade here when we went from 45 to 43 and change. So if you're looking for resistance in the 44 handle in General Motors, there isn't any, because you had that big down day, as you can see on the chart. We will keep an eye on if it really can sustain this rally. 45.17 was the high on October 27th. I don't know if you can get there today. You're already up. No, maybe. It's only up 37 cents at 44.25. And that actually fills the gap from that day that I'm sure it was hit with the downgrade. That's when it went down over $1. So 44.10 fills the gap in GM.
Viacom catching an upgrade at Deutsche Bank. We just talked about it briefly there on the big 2-day move it's had. And this is a reversal off of earnings there too. And obviously then the Fox, they had the reversal off of earnings where the stock actually closed fairly strong on the Thursday. And then Friday had the big move because Thursday night, the Fox rumors were, the Comcast was kicking around, Verizon was kicking around. We know Disney's been kicking around for some Fox assets. Well, they decided that their, Viacom's in, play, or at least, their assets are in play here as well, because it popped 10% on Friday and it kept going. I'm kicking myself because I did have this one in the pre-market. I had it long and I sold it. It popped 60, 70 cents. I bought it like around $24 in the pre-market, and it popped up and got up to like $24.90. I think I sold at, and I ended up going over $26. Now it's $26.40. I guess I got to squeeze that scalper blood out of me, Joel.
Series of highs in the upper 26 handle, with the highest of those being your October 18th high at 26.99. Where are we trading at now? 26.40. I think it's 27. You got to think about this too. It's like, what an easy short here since the end of March, right? Really little bump here, not much. Another gap down, a bump, consolidation, another low, then a new low of the move, and now it's turned. So I think the people, your longer term shorts here, I don't know if you're going to be able to buy on weakness, and I don't know what's going to go on in this media sector either here. But there's
some stuff in play.
Yeah. What way is it going to go, though? I mean, there's just so many things rumored. I don't know who's going to go. But I'll tell you right now, you've been sitting on this Viacom B for a short. It's been pretty easy since May. I don't know if you're going to get a chance to buy it at 22. Yeah, at 23. But we'll see what happens on Viacom B and a couple of these other media stocks on the move, and just have to see what happens.
Verizon catching an upgrade at Wells Fargo. The telecom stocks have been weak, but the last couple days showing life as well. Verizon last 2 days showing life, so I don't mind this upgrade. They're showing. They waited till stocks started showing a little bit of life, which is what I like. And now you're seeing it up here this morning. Zebra trading up 40 cents in the pre-market. Thoughts on Wells Fargo with the upgrade on Verizon?
Verizon is what you want to know, not Wells Fargo. 45.
Oh, it's with sorry.
That's okay. Keeping an eye on 46.35, and we're only 50 cents away from that. You got a big gap up to 47. 24 in order to fill that gap. So we'll see if we can get some continuation move here in Verizon. And let's just take a look at AT&T as well. That stock has been beaten up, and let's see if that is going to flow over into the AT&T for the pairs traders. AT&T, let's see our pre-market chart. Is that showing us anything? Just hanging out.
It's just straight up a nickel. The AT&T is a little bit to do with Time Warner too. So much uncertainty there, where it's not trading, perfectly like it normally does. Like normally it just trades along with the TLT and Verizon, but there's other factors going on there. We don't know if this deal's going through. We don't know if this. Oh, that's the uncertainty around the AT&T stock right now.
All right, 8:30 here, Dennis. How are imbalances?
The Square every single day. Again, it's trading up here 1.6% in the pre-market, and it has 114,000 shares to buy. So Square is a broken record. That thing goes up every morning. I buy and balance every morning. Alibaba, 38,000 to buy. Same thing. It goes up most mornings. The tech stocks are hot, especially the ones that are going to report. CRM, which is Salesforce.com, is trading up $1.22, 70,000 shares to buy. I believe they report this week as well. So, the stocks that are due to report, they're running up ahead of it again. Nike, a little bit weak here this morning. It's had a good run, Nike. It's got 63,000 to sell and trading down here in the pre-market there. General Electric, slight sell on balance of 41,000 shares. It's just kind of sitting there. IBM's interesting to me. It's starting to show a little bit of life. Everybody hated it when it was 145. It got up to 160s, and they're all loving it up there at the highs. It's pulled back, filled the gap now, and it was, the last couple of days was saying it's interesting down here. And it's got 30,000 to buy here this morning. It's trading a buck in the pre-market there. I kind of like the IBM chart. If it can get above 150, it could be breaking out again.
All right, a couple things on IBM before we take a break for our next guest coming up. You had the gap fill. You had the big run up, and what was Mr. Buffett doing during the strength in IBM? He was selling, right? He took up. I don't think he got completely out of his position.
Smart.
Yeah, he sold into strength and
sold 2/3 of it.
Yep, and then you came all the way down and you filled that gap from the earnings day. And Dennis, there was a bullish piece in Barron's over the weekend. IBM, blue chip at a bargain price by Jack Huff. He points out this long-suffering computer giant shares are cheap, and it shows signs of renewed life here. So had the big run up. If you liked it at 162.50, you got to love it down here at 150. IBM, if you're looking for perhaps a stop out, the low of the move that was made 3 days ago was at 146.21. And I was almost just looking at that. It's just like, hey, it has the gap fill. Boom, maybe get a little bit of a technical rebound here, but it's basically a reset from the earnings here on IBM. Dennis, do you have that anymore, or did you?
No, I sold IBM. It's interesting to me. It's just kind of, I gave, we talked about this, I think 2 days ago on the show, and I'm torn. I like the 4% dividend. I don't mind the chart even here right now, because I think there's some support down below, because you had so much, trading action in the 145 handle between the month of September and October. So I think you've got some support. So I think from a technical perspective, it looks okay. I'm just scared like that they haven't kind of figured it out. Like my argument a couple days ago, or Thursday, I think it was, or Wednesday, was that these were one of the first to get on the AI bandwagon with Watson, and they really didn't do much with it. They didn't do enough with it. So I'm just concerned that they're big, a lot of employees there, and they can't really figure it out. So that's why I don't own IBM. It fits my bill though. It's a value tech, and I have a lot of value techs that have done very, very well for me over the years. But this one I do not own in my invest portfolio, but it's interesting. It's on the watch list. I'll say that.
And the other thing too is, going back a few years. I mean, they used to just advertise like crazy. They were everywhere, and I guess they cut back on some of those advertisements and spending. I don't know. Maybe if they get back in the news, all the sporting events and everything, maybe get some interest in it. But from a technical standpoint, IBM is trying to get back into the 150 handle, up a buck. Your high on Friday was 150.15. So we'll see. Double top to contend with up near 152 if you can stay in the 150 handle. All right, 8:34. Spencer, we got a guest on this Monday morning.
We do. Phil Davis. His site is philstockworld.com. Always likes to break down his trades with us. So we'll be right back with Phil Davis in a moment. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. We're joined now by Phil Davis. He is the founder of Phil Stock World. Phil, how's it going today?
I'm good. How are you guys?
Doing okay. Hope you had a nice, pleasant, relaxing weekend. A short week this week, obviously, with the holiday. We've covered a lot of stocks this morning, but what is on your radar?
Well, I was actually just saying to my people, I was like, what are you guys doing here on a Monday on a holiday week? I said, did we become traders so we could sit in front of a screen all day, like, on a holiday week when we could be taking off and having fun? The whole point of being a trader is you're not chained to like some 9-to-5 job doing things like this. So let's start off with that. This week is completely nonsense. We expect to drift along into the, in the highs. I don't think the people who are manipulating the markets, and they are manipulated, are not going to let the market go down into Thanksgiving so that people go home and talk about the market going down and panic. That's the last thing they want. So we expect everything to stay hunky-dory probably all the way through the end of the year. But then in January, we're looking for some selling to start.
A common theme that we've been talking about for the last week or so has been the strength of the retail trade. Has that been on your radar at all?
Absolutely. In fact, just this morning, I was writing up that Macy's is probably going to be our trade of the year for 2018 because it still hasn't really taken off. We usually pick our trade of the year around Thanksgiving. So, this week I have to decide on my trade of the year. And it was going to be limited brands, LB, but they took off already. In fact, we featured limited brands on your show before it took off. About two times ago I was on your show. Limited brands was the trade I picked for it. And but they've flown higher, so we're off of them. And then going through our retail list, we moved on to Macy's. And Macy's we like because as a fallback, they're a fantastic a real estate play. But but as a company, they've just gotten so beaten up for no good reason.
Phil, Dennis Dick here. Just want to expand on that though, and I've heard this a lot of places, and I just want to get your thoughts on it as well. I thought the same thing, like as the real estate, but does the debt not scare you? I mean, there's just a ton of debt there. Like you could say, okay, yeah, they can spin off and do the real estate, and there's more money in real estate than there is in market cap value. But there's so much debt there too. Is that not a little bit as concerning?
No, because Macy's isn't Sears. Macy's makes $1 billion a year.
So you're saying it's not going to become Sears? That's what I made an argument on this show that it could become Sears though.
No, because Sears services, this is something, by the way, it's a theme we have that we've been preaching to our people. It's very important. Stay away from stocks that service the bottom 90%. Because the people in the bottom 90% are still struggling. They don't have money. They don't have disposable income. This new tax bill is going to completely screw them over. They have no idea what's happening. And but people in the top 10% are going to have the greatest party ever. And they got tons of disposable income. And Macy's is a top 10% store. Sears is not. Sears is for the bottom 90%. Frankly, bottom 80% or 60%, really.
Okay. It's a good argument to make. I never looked at it that way too. So okay, so give us your thoughts there on Macy's.
So Macy's, like I said, on the bottom line, they've got a ton of valuable real estate. Because if you think about where Macy's is, first of all, the stores have been there forever, right? So they're mostly paid off. They do have a lot of debt, but they've got leases and whatever all over the place. But they also have a lot of stores that are paid off. They've got prime locations, incredibly cheap rents. There's some smart stuff going on now. Macy's has been renting out part of their store to Starbucks. Sears actually is putting Dave & Buster's in some of the Sears, which is also a good idea. They're starting to say, well, we don't really need 300,000 feet in this mall. We could cut it down to 150,000, sublease our space at better rents. So now instead of the mall owner getting the high rents, the department stores who are able to sublease space are able to get some higher rents in parts of their store. So that, it's a slow adaptation to what's changing the environment. You want to have things in your store that attract people aside from stuff, because stuff isn't really selling, but doing stuff sells. So people want a reason to go to your store. So, sticking an amusement park in your store is not a bad idea. So Macy's, like I said, they cater to a higher class crowd. They got Starbucks that does very well in the Macy's stores. And obviously, keep putting the Starbucks in there. It's exactly the right crowd for that kind of thing. And their locations are fantastic. They're generally the anchor of the malls. They have incredible amounts of parking. They've got great locations. So all that's good for them. And like I said, they actually make a profit because they're also, again, they're not selling to the people who don't have money. They're selling to people who just walk in and buy stuff and don't worry about the price as much. So which trade is better? I have to look at these trades. I'll give you the cheaper trade. We had two trades from Macy's. One we did pre-earnings, one we did the day of earnings because I couldn't believe the stock didn't take off after the earnings report. You know, it was still like laying around at 10 o'clock in the morning. So I put out a top trade alert telling people, oh my God, this thing is still so cheap. And we had a great report. At the time, it was like $18. Now it's 20 and change. But even so, the spread that we had, hang on, let me just double check something. The spread that we bought for $800 has already jumped up to $2,260, which is nice. It's up 282%, but it's an $8,000 trade. So it still has, from the current price of $2,260, it still has $7,740 left to gain. And now it's a very safe looking trade compared to where it was when we started. So you don't get the big pop that you got from our initial play, but as a play starting right now, it's still a fantastic trade. You want to hear what that is?
Sure.
All right. So we've got, this is for 2020, and I've got a whole lecture on my site today about why we play this way, because we play long spreads rather than taking short-term risks. So we play a long spread that our fallback strategy is we can roll it, we can adjust it, we can do all sorts of things. But even in the short term, like I said, it's already up 282%. Even in the short term, it makes some good money. But here's what the spread was. Or here's what it is today. I don't want to confuse people. Forget what we bought it at. This is what it is right now. We sold 10 of the 2020 $15 puts. Those are now $2.58. And we bought 20, so double as much, of the 1822 bull call spreads for $2.02. So that's 4,040 on the bull call spread and 2,580 on the on the short puts. So you're netting into the position for $1,460. That's still very, very good. Your worst case scenario is you're going to have 1,000 shares of Macy's assigned to you if it's below $15, but then your net is only going to be $16.46. So your downside is getting a tremendous 20% discount on Macy's. Your upside is from $1,460. You're going to get a return of $8,800. No, not $8,800. Sorry, I'm being completely wrong here. Of 18 to 22 of $8,000. Sorry. So your return off of what is now net $1,460 would be $8,000.
All right, we're on the line with Phil Davis. Phil, you talked about some stocks that you're looking at for 2018. Do you have any short candidates, like your short of the year for 2018?
Well, frankly, our short of the year is really TVA is a long, the ultra short on the Russell.
Okay.
I think when the stock market starts going down, the Russell is going to go down pretty hard and fast, and the TVA, which is the ultra short ETF for the Russell, is going to go rocketing higher. It's currently only at $13.52. And there's all kinds of fun ways to play that. Now, that one, you can just buy yourself a call if you don't want to buy the stock. Although, frankly, at $13.52, it's such a good hedge because you can buy it for $13.52 and you can sell the January $15 calls for $2.25. So, if you're paying $13.52 and you collect $2.25 for the January 15s, your net is $11.25. So that means your upside is just shy of $4 at 15. So you have an upside of 15. You make 40% or 35% upside on the trade. And your downside is you own TZA very cheaply as a hedge into next year. So if you need a hedge, it's a fantastic way to hedge yourself. But also, frankly, it's so cheap at this price that if you just want to hedge yourself into the holidays, you can pick up the $13 calls. No, sorry, change my mind. The $12 calls. If you pick up the $12 calls of April for $2.40, since it's at $13.50, so you're only paying $1 in premium, but you're protecting yourself from any kind of massive move in the market that goes against you. So it's a great way to hedge out your portfolio.
You mentioned, when or if this market goes down. I mean, are you looking for something fundamental in the market? I mean, we do have a lot of things going on in Washington. What are you looking at? I mean, is there a trigger? Is there a daily level that you're looking at? I mean, because catching the turns.
We went to neutral. We stopped trading basically. We parked our portfolios in neutral. We still collect our dividends and such, but we hedged ourselves to the point where they basically don't move now. And we're doing that into the holidays. We've completely lost interest. Now, although I say that, we did actually pick 6 new long positions for our portfolios, but still we're hedged well enough where we're not taking any big risks into the holidays. Like that Macy's trade is an example of one that was so fundamentally good that we couldn't resist it, so we put it in our portfolios. But you've got this. I mean, Trump over the weekend was just so out of control with his tweets. I mean, I don't know. We'll get into it, but it was just like he's saying incredibly weird stuff. And you have that going on in the background, but also this tax bill thing. If it passes, which everybody's counting on, of course, that's one of the reasons. In fact, Buffett said this too. One of the reasons, if you're a wealthy person and you're in the high tax brackets, you don't want to sell anything this year and take profits because you're going to get taxed at a much higher rate than next year. So if there's any possible way, and that's what we've done, we've locked in our gains. So if there's any way to keep your gains into next year and take your profits next year, it's very advantageous tax-wise, assuming the tax bill passes. So there's 2 possibilities. Either the tax bill passes and everybody waits until January, February to start selling, or the tax bill doesn't pass and everybody freaks out and sells anyway. But either way, I think this market is way too toppy. It's being held up solely on the expectation of this tax bill that's going to increase corporate profits without the corporations actually doing anything profitable. That's the key. I mean, it's the same things like all these idiotic buybacks. It's like the companies aren't doing anything better. The economy isn't better. They're not making more money. They're just getting better ways of lessening their share count and not paying taxes and so on and so forth. That's not a healthy corporate environment. It's not sustainable.
We've been on the line.
A company can't keep growing by cutting taxes forever. That's ridiculous.
We've been on the line with Phil Davis. He's the founder of Phil's Stock World. Phil, great speaking to you. Have a great holiday. We'll speak to you again in 2018.
All right. You too, guys. Have a good holiday.
All right. So. S&P futures climbing into the green here, up 250 at 25.78.75. We have Friday's intraday high up in the 83 handle. Dennis, the holiday trade. I looked at my stock traders almanac, and
what's it say?
It says there's a little buy-in going. Right? You want to be at that turkey dinner, and you want to talk about your profits in the market and keep everyone happy, and that's pretty much been the historical pattern through the Monday, Tuesday, and Wednesday buying weakness. You saw that late in the week last week. And then the Friday, 3 of the last 4 years, I think you've had a little bit of a down day on that Friday. People kind of digesting their meals and their stock portfolio as well, and maybe get into a little bit of year-end tax harvesting. But, I have to agree with Phil on that one.
Yeah, I think I agree with what he just mentioned too. Just basically saying we don't see any major sell-off coming here because they're going to try to hold the markets up through this. I don't even think they need to hold them up. Markets get thinner. The one thing they do around the holiday trade is they get thinner. So if you do have news or you have something impactful, it can actually move the stocks more because there's less players out there. Especially once you get to Wednesday and Friday, those are very thin days. And Friday, I'm always torn. A lot of people say, "Why would you trade Friday? There's going to be nothing going on. With everybody, taking, who's going to come in for a half day on Friday to trade the equities, after their big Thanksgiving, watching football and watching the Lions win, who's going to come in on Friday? Well, I'll tell you, because less people come in often gives you more opportunity, because the books are thinner, less orders out there, there's less things. So if there's actually movement, if you have some movement that happens in some individual stocks, those moves can even be bigger. So historically, it's been one of my better trading days, that half day. So I personally never miss that Friday, the half day, because there's a lot of opportunity in thinner markets.
And how long has it been a half a day? That's only, a
long time now.
Long time?
I feel like a long time. I don't remember when it wasn't. Maybe you're dating yourself here, Joel. I've been in the markets since for 18 years. I kind maybe it wasn't a half a day back then. I can't remember on the Friday, but it's been a while. Maybe somebody in the chat, some of our legacy guys like Jimmy, maybe knows when they turned over there. But
so you think it's over? You think it's over 10 years?
Oh, I think so.
15? 15?
I think it was a half day when I started at Bright 1999. Maybe I'm wrong though. I feel like it was. Like, it's always been off on Thursday, half day on Friday.
No.
Close Lux is 1692.
1492. That's when Columbus sold the Ocean Blue. It's
Jimmy. It was a half day. Jimmy's in there now. He's saying since 99. I think Jimmy is agreeing with me.
All right.
He says he thinks so too. We'd have to look it up. Spencer's get a hunt and stuff. He could find that. How long has been a half day on the Friday? We really went on a tangent here.
You want to ask?
I'm not looking that up. No.
No, you're not even bothering. You're not even bothering my. God. Okay, fine. GE 175,000 to sell. The sell and balance guy is still lurking out there. He was just a little late to getting into his desk here today. Maybe he had a busy weekend watching all his football yesterday. Anyways, GE is starting to leak here again. Just looking here in balances too. The IBM one has grown. The Salesforce.com one has grown. Just go over to Snap. We didn't give that one here this morning. It's got 16,000 to buy. It's fairly small. Twitter actually is 30,000 to sell. I'm marking that one though, because I like it on the charts and I like it for the square play that you were talking about. Just the Jack Dorsey trade maybe in favor here right now. So we'll get a little pullback maybe in Twitter here. I'm interested in that one as well. And then there's a few ratings we didn't get to too. And the big rating we didn't get to was Walmart getting downgraded at Goldman Sachs. WMT.
All right, let's talk about that one, Dennis, because we were having a little back and forth in the pre-market show about this thing going over 100. You said you had an order in there.
I did. I was trying to sell it off the $100 level. I think, and I looked at it back and I was like, I trade $100.13. Why didn't I execute? I think I was $99.95. It's like, why did my short go off at $99.95? I think I probably had it as an OPG though. So opening only order where it would cancel after the open. So, and obviously it opened lower. It opened down at $99.24. So I think that's why, because I did check the time and quotes and it did about 9:33, did take out the $100 level. But, that's sneaky. A lot of times I like to do that. Go take out the big psychological level and then come back down through it. And it didn't even stay up there for more than a few minutes. And it was back down through the $100 level and then obviously leaked the rest of the day. So I think Walmart, it was overdone on Thursday, in my opinion. It got up and kissed out just to hit the stops at 100 and now starting to leak here a little bit. So interesting. Goldman coming downgrading stock to neutral here today. I'd keep an eye on Thursday's low at 94.72. I mean, if that's your level of support, otherwise then you get into the gap area. But that could test today. I might try to do a little bit of bottom fishing there in the lower 95s because I think you might find some support at that low from Thursday at 94.72.
Yeah, 94.72. Very unusual move for Walmart to have a gap up and to do all-time high, I believe, by $8-9. Let's see if this thing, I don't know if you want to be selling, into the hole like this, but eventually it's going to get a little, find a little support, get a little bounce, and maybe get a little bit of a, 50% retracement going back up towards that $100 level. Now people kind of, I missed the, when it's going straight up, 96, 97, 98, 99, the institutions are laying the big orders out there, right? They don't care. This is my target. This is what I want out. Probably a boatload orders at 100. Now you pull back here and you're down $1.16 at 96.31 to get you're actually where you're trading at according to Friday's low. Friday's low was 96.58, so a little gap fill there. I'm sure a lot of people would want to get out at the second highest all-time closing high in Walmart. That was from Friday at 97.47, and then you have the all-time closing high on Thursday at 99.62.
This there's some interesting. Nike's 94,000 to sell here now. It's grown actually as well. It's a balance there. And then just looking, they're mixed. They're so mixed. And I guess when you get a day that the S&Ps were down and then they're up, it's going to probably be mixed. But I'm seeing a few selling bounce. Like Ford is a 67,000 share selling bounce. GM is a 22,000 share buying bounce. Now GM caught the down upgrade, so that's not surprising. You look at CVS, it's kind of just been hanging there. It's got 31,000 to sell. What do you think of, Walgreens, CVS? I mean, we've seen a pretty good rally here in a lot of the retail box stores here in the last little while. CVS really hasn't participated, though, at least not in the last few days. This interests you at all, the CVS chart?
It does interest me. If you look at the levels from the last two sessions is what interests me. Two matching highs at 71.03 and 71.05 here. You're trading down 9 cents in the pre-market. Another high, quite a bit above that, is 71.44. But I think this clears 71, respected as resistance for now. But it was a double top from those last two sessions. So trying to get off the mat. I'm not sure why we spiked up to 74 one day or if that was even a good print, but 71, that's the level in CVS. And it's just like, is Amazon coming in? They always hit on those kind of rumors. I don't think the stock's had that bad of reports. Walgreens, 9 points off its low, 8 points off its low. So
it's rallied more.
Yeah. I don't know why, but I know why. I think both these stocks had those pops. Was it something about Amazon not applying to sell prescriptions in certain states or something? I think that was some news that we had from last week.
Looking at those pops back.
That was Amazon saying that they're not going to be using their selling license to sell drugs. It was in like 4 states: Indiana, Florida, a few other ones.
This Amazon, it affects so much. Isn't that incredible, though? Like, you just think about, and things get overshot, and they really overshot. I mean, Costco is the best example. When, Costco lost $30 over the couple of days after Walmart bought Whole Foods. Now $150 was a huge buying opportunity, and now it's back here at $171. But now you look at a lot of these stocks and come back so far. I mean, we even hit Walmart. Remember, Walmart got hit that day when Whole Foods was bought by Amazon, and Walmart went from $80 to $73. Now Walmart's $97. Like, they've basically said, Walmart is Amazon proof of what the market is saying here, which I think is nonsense. But, Walmart's the new, or they're saying not even Amazon proof, they're saying it's like the new Amazon with the Walmart online going head to head with them. It's funny how the media will, just find the story for the price. But, the Walmart's been an incredible move. It was cheap from a valuation perspective there. It's not as cheap as it used to be. What about Target? Because Target has lagged. I mean, Target has lagged, and we did talk it briefly. It bounced off the $54 level there, but you think Target's that much behind Walmart or Walmart? Just because I'm just looking, $58 all-time high. You got, I used to pair trade these two together. When you used to have Walmart making new highs, you usually always had Target too. Look at Target, $85, it's $58. It's so far off the highs. Is Target just that far behind Walmart?
I actually wanted to ask you, Dennis, about Target, because you touched on it like 25 minutes ago or so that it's bounced back since the earnings. They had a great earnings report, and I remember you saying, well, whatever day it was, Wednesday, Thursday,
54.
that it didn't matter how good the report was because it was just a down day, so they were going to be down regardless.
They reported on the wrong day.
Right, right. But they've already gained half of it, or most of it back. Half of it back now. So I just wanted to say that was stupid. That's all I wanted to say.
That it went down, on that report. The 54, I mean, that's level trading, just going right to it. I mean, we bought them 4 times there at the end of August. Like, that goes right to Joel's levels. I mean, Joel's always been the guy with the levels. And 54, we talked about it on the show. That 54 level was hanging out down there. We even said it on that day, I believe, like it was traded around 54.5 or something. We're like, if that gets anywhere near 54, there's tons of buyers down there. Got to 54.13, didn't quite get to our level. But man, if you just paid up a little bit, holy cow, here you are 1 day later or 2 days later, 2 trading days later, and things up 8%.
Risk reward, Dennis, and people are looking at charts jumping out a little bit ahead of us with big institutional orders. Target, if you're looking for a gap fill, which you see so common, need to get to 59.15. That day it closed at 60.01 and fell $6 the following day. Found support now. trying to get back up there. Just remember 59.15 for a gap fill. All right, Spencer, 40 seconds over here. You want to wrap things up and preview tomorrow's show?
Yep, on the docket for tomorrow. Well, we would be joined by Nick Shaheen, but he's actually going to be off tomorrow. So we're going to find a replacement guest for Nick on tomorrow's show. But if you missed any part of today's show and our interview with Phil or our discussions about any of the how many stocks do we talk about today, Joel? Like 10 stocks? Any of those guys, you can catch it on our podcast.
10?
I don't know.
Over.
Okay. 15, 20, I don't know.
Okay.
Catch our podcast on iTunes, SoundCloud, and Stitcher, or you can watch the show again, youtube.com/Benzinga TV. Thank you to everyone who joined us either on YouTube or on premarket.benzinga.com today. Thanks to Phil Davis, and have a good rest of your day, folks. We'll be back with you on Tuesday.